Hey, good evening, everybody. My name's Steve Goodey. I'm the guy in the little box on top here. And underneath me is Shane Carruthers. We're coming to you live from windy, wet Wellington. I'm definitely contemplating building an ark at the moment. She's been wild. And young Shane there is coming to us live from the Bay of Herne Bay in Auckland. Thanks for having us, Shane. Good to have you again.
Yeah, it's super sunny here, almost summer. I don't know if that makes you feel any better about everything.
Yeah, pass. All right. Well, look, as always, we're going to get into some deals, but beforehand, we're going to do the obvious disclaimer. Nothing we're going to talk about tonight is financial advice individually. We don't know your individual situations. If you'd like individual financial advice, we recommend you speak to your financial advisor, accountant, mortgage broker, or alike. What we are going to talk to you about, though, is some property deals. And the big news for today, which was the least shocking shock of the day, I think, is the OCR increase. So they were kind of talking about it, doing it, and then it looked like they might not do it, and then they did it. So, here we are. It's a 0.25 increase to 2.5%. And Tony Alexander jumped straight on board with a pre-written commentary basically saying, be thankful. An OCR increase actually means the market is actually getting better. I don't know if I 100% agree with that, but it's just another excuse for people to sit on the sideline, in my opinion, and not do something during possibly one of the greatest downturns, I suppose, that we might see in our property careers. And, I've been talking to a lot of professional property investors and traders all day today, going back and forth, and most of the people I'm talking to are going, well, anything you pick up right now is going to be horrifically cash flow positive if you buy the right sort of product. And it's going to be the thing that you're most proud of in 5 or 6 years' time when the property market comes back. I'm not trying to sugarcoat a fairly average situation, but I think that we always go through these times in our investing careers where another month of mortgage payments equals another month before the property market goes back up again. And I just think we're in that holding pattern at the moment. How are you feeling about it, Shane? The stress beads or nah?
Yeah, no, we're certainly cresting out of a flat market. There's still opportunities there. It's a little bit different to some other flat markets where the interest rates are at a reasonable level, probably lower than 2 or 3% lower than the sort of 10-year average, and also you can get finance. So we've certainly had bigger corrections, but you couldn't typically get finance then. So it was a bit like you could see the deals, but you couldn't buy them. So it is kind of the perfect storm. Most everyone I talk to has got a finance approval. They all seem to be faffing around and overthinking things. And I just think you got to get a criteria of what you want to buy, and then you're just going to look like a champ in 4 or 5 years. I mean, in 5 years, definitely. In the short term, who knows? But 5 years, you're going to think, wow, what an amazing purchase that was. Because, we're most definitely at the bottom, and I think we're cresting out of it. And some areas are actually quite busy. So, so you may well miss your opportunity if you wait too long.
Yeah, agree. The further south you get, the better it seems to be. But, we promised you guys some deals today, and we've got some fresh and some awesome property deals for you. We've been working pretty hard to find some cool stuff. And the very next slide, I'm going to show you a property deal, which I think is pretty legendary. And I think that just everybody on the webinar tonight will understand why this is such a cool property instantly from the very first photo. It's an absolute complete giveaway. So let's have a go. Yeah. Have a look at that. So this is a 251 square meter, 6-bedroom property on 3,000 square meters of land. So this is your classic Kiwi mansion from back in the day. I found this online and looked at it and went, why the heck hasn't somebody, done something fairly serious with that? So this is in Whanganui. The Whanganui River is right in front of you. You can see it there in the upper part of the photo. And the elderly couple that have been living in there for an entire generation have just gone to the retirement home. It's an older property. but it's massive, absolutely huge 6-bedroom property. I got the floor plan and went, well, that could be an 8-bedroom straight away. But like, there's a lot of things you can do to play with and work this deal in this property. And just one of them is that the house will finance the entire property. So you can play with that backyard until until the cows come home, use it as a sandpit. So we've got it sitting at 12.5 gross return. That's based on turning the 251 square meters in the front from a 6 to an 8-bedroom, but there is a conversion there that it becomes a 10-bedroom as well. It just does depend on how hard you want to take it. There's already 2 bathrooms in there, 2,929 square meter freehold site. And if you look at where the house is, your driveway comes down the right-hand side of the house to that garage. You can also do a second driveway down the left-hand side to totally separately access the entire backyard. So first thing I did is I rang council and a couple of planners in Whanganui, and once again, this is not financial advice, and said, how can you subdivide this? And the overriding answer is yes, based on council approval. So there's nothing there that says you can't subdivide it. So the next thing I did, Shane and I have got a really good mate, Matt Perks. And Matt Perks is a really decent guy, solid bloke, part of our met him through property friend group. He's a good geezer. And he owns a company in Whanganui called Trident Homes. So I gave him a yell and said, well, what can we do with this thing? And he goes, well, look, you can get 6 or 7 sections out of it, but the best use of the space is to build 3 blocks of flats, 3 blocks of 2 bedrooms back there. And he'd done some drawings and some really basic numbers on that. That's the way that my brain would work. It's turn the front one into a boarding house, make it cash flow positive, start building blocks of flats on the back to make it more cash flow positive, be the developer, keep the developer's margin, don't have to pay the GST because you're keeping them, and hold them forever. And then this little village that you've created then becomes, it could be your entire retirement. Shane, on the other hand, had a slightly different opinion. Which way would you cook this one, Shane?
Yeah, I think that's a great idea as well. Or in the short term, you could put some relocatable homes of a similar era on there, maybe 2 or 3, and just get huge cash flow from it. Don't subdivide it, just connect services up. And then when you're ready to do the development, there's like Lego, you just remove those relocatables, sell them to someone else. So that's the second option, but both are good. You'd have to run the numbers on both, and we can work through those numbers with you to see what option would work. Or the first option is to just do what Steve said, which is just cash flow the front house and land bank it.
And the third option too was, if you are land banking it or owning it for a period of time, trying to buy the other one, the one on the right-hand side. So it's a fully rectangular site, because then instead of putting a driveway down one side, you'd bring the driveway through the middle and have your own little cul-de-sac.
And they'll likely want to sell it to you if they know you're going to develop it. They won't want to be a part of that. So it may be an easy acquisition. And then all of that's coloured in, which for my OCD would be better. That wasn't more of a rectangle coloured in. So
and to do a little bit of housekeeping here as well, guys. I imagine that there's a lot of people on this webinar tonight that have seen our webinars before, but this is how it sort of works. You'll have a comments list in the side of your webinar software with the StreamYard software. And Rome, my lovely admin lady, has just put a link in there for this deal. Now, if you click that link, it's going to take you to Shane's website, and it's going to show you this on a page. And halfway down on the right-hand side, there's a button which says something like get more information. It opens up an email, you hit send, and by the end of the night, Shane will send you the information pack on this property deal. Now, I've spoken to a few people in the last few days who've asked me some interesting questions about these deals. Firstly, no, we don't have $100 squillion in every single deal. We have a pretty subtle margin in there for our work. But what we provide is a certain level of due diligence and, I think, uniquely honest assistance in helping people purchase truly cash flow positive property deals. So by all means, if you're interested in any of the deals, click the link, ask for the further information, and come back to us, and we'll work with you and walk through it. We're pretty good, Shane and I, these days at having conversations with people, seeing if something fits your portfolio, helping work with your mortgage broker, getting your finance approved, helping you with your due diligence, helping with recommendations of how to renovate places and pull out their best and highest use, so that you can then recycle your equity and come back and buy something more off us or somebody else, or find something yourself as well. But also what we've found was happening lately, and Shane and I are like somewhere between stoked and terrified about this, is that a lot of real estate agents and a lot of private individuals are now bringing us interesting property stock like this because we are the experts at it, and because we're the likely people to find a sale for these things and complete the process. And we'll see that with some more of the property deals that we've got coming up. So Shane, you want to walk us through the cash flow, likely cash flow on this property then?
Yeah, so the 2,080 per week is based on renting the 8 bedrooms. You could just rent it as just a standard house. It would be a pretty horrible yield at that. Maybe you get $800 a week, so maybe 5% probably wouldn't cash flow. So it makes more sense to do the rent by the room. There's plenty of people there that would rent it. It's a cool house. You're only doing 251 square meters into 8 rooms, so it's manageable. And then you just got property management rates of about 7K. Insurance, we're estimating about 7. And then you'd have parent internet to run the rent by the room. So you'd end up with $650 a week cash flow positive, 12% gross, and close enough to 10% net. So it's actually a great deal, even if you were just buying that without the backyard. So that's the beauty of this deal, is you've got a land bank, but it's actually a cash flow, and it's easy to understand because you can just see the deal.
Yeah,
it's not complicated, and you can do a lot or you could do nothing. So yep, I like it, and a good price point.
It really is, yeah. And we've got a property manager set up for that. We've got a builder ready to go. We've got all the little pieces put together, so you're not sort of reinventing anything too terrible. And as I said, that property, that deal number 1, it's in the comments. Click the link, ask Shane for some further information from his website, and we'll get that out to you, and we'll start having a conversation. Obviously, usual story, no obligation to that. We work with an awful lot of people sometimes before we find something that's going to find a home, but realistically, every month we do a property deal or show it on the page like this, and every month somebody goes, "Oh, I gave you a call back a couple of days later, but it was gone." Yeah, that happens. Some of these deals take us 2 or 3 months to negotiate, and they go fast. So if this thing interests you and gets you excited, give us a yell tonight.
Yeah, and you're not doing an unconditional deal on it. You're doing a deal with some DD, so don't be afraid to get stuff under offer to work it out if it makes sense.
All right, so the next deal, deal number 2, Dunedin. So we've been working pretty hard on these, what I call, I suppose, blue-collar towns. We've been doing a lot of stuff in Whanganui, Palmerston North, Hamilton, Dunedin. And this is exactly that, except this one's, once again, it's a village. It's bloody huge. So 14% yield, 3 titles, 27 bedrooms. We've had the rent not guaranteed, not approved. What would you call it? A conversion, I suppose, with sets of financial accounts at $350,000 a year. This thing was a conversion from a commercial building into a boarding house sort of situation, rent by room situation. It's 27 bedrooms. It's walking distance to the center of town. 7 bathrooms. It's nearly 800 square meters of building. Absolutely.
Over 3 titles and 3 buildings, and on a corner as well. So it's got so many factors that make it. It's not just one massive building down a road, down an alleyway or something. It's like prime central city corner site. Road frontage on 2 sides, and then 3 separate titles. So yeah, it's very cool.
And unlike some places in the South Island, you're not up for 60 grand in rates and insurance, which is insane, but this one's going to be $2,500 a week cash flow positive, and it's all going to just come down to what sort of occupancy rate you get, whether you want to renovate it to a higher standard or just leave it sitting as it is. But this one's a sitter, I think, quite realistically. It's one of those assets that you would buy and own it for 15 or 20 years, and it will become, in my opinion, the linchpin, the key to your entire portfolio. Because once you own this and the bank takes a look at it and gets a feel for it over 6-12 months, the banks can understand that the need for this sort of accommodation in Dunedin isn't going to dry up anytime soon, and that it's a little bit clockwork, and it's going to work very, very nicely. So once again, it's a lot of building. It really is such a good location.
Yeah, and like I said, not for everyone, because it is basically a commercial lend, and it is, this part of $2.5 million. So not a deal for everyone, but it's if you are in that price range, it's a substantial asset to own, and will be the gift that keeps giving.
And questionable color scheme. Don't get me wrong. I mean, I love pate. I'm not, but I'm not funny about it. But flew through a builder's report though, so pretty happy little asset there, really. Rome's just put that link up for that, which is deal 2, Dunedin, 27 rooms. Once again, all you do is, I'm gonna test it now just to make sure it all works. Oh, yeah, it does. Look, it pops up there. There you go. Easy. So all you do is click it in the comments, opens the website, apply, and and you'll end up having an email back and forward with Shane with some further details and a whole pile of bits and pieces on it. So here's some numbers on it. So they're pretty big numbers, really. So market rent, 350 odd grand, $6,700 a week. So if you took a mortgage over 2.3 million, that's going to be 115. Property management, 30,000. We do have local property managers running it. Rates, 20 grand. Power internet, about 25-ish. Gardens, a bit of maintenance included. You can't get away with no maintenance on a property this size. You are owning a small village, and it's going to cost something. 15.5 for insurance, which is pretty reasonable, really, for something of this size. With, as we said, 3 titles, very, very reasonable. So your total outcome is going to be 220 with $127,000 of cash flow, so $2,500 a week. And I've said this a couple of times, but we have customers or clients, if you like, who come to us and look at this, who go, can I put in a 10% deposit? And the answer is probably no. But more often than not, we have people who come to us and go, hey, can I just put $1 million into this? Can you show us what the cash flow will be when I do that? And it's really interesting. People will just put money into something like this to put their money somewhere where they get a better return than where it's getting a return at the moment. And you don't get much better returns than exactly this. 15% gross, but gross is irrelevant with a property like this where it's so big and there's so many costs and expenses to run it. The truly relevant part is the thick part of 10.5% net. And this is one of those investments where you could do some quick cleanups and tidy ups, paint, carpet, curtains, if you wanted to increase that return, and then put the rents up the following year by $10, $15 per room, which would, get you well up over that $3,000 a week.
And I think it would value closer to the high end of the 2 mil mark. So you're going to get an equity uplift. You got cash flow. You don't really need to do anything. And in 5 years' time, your yield's probably going to be 20% because your rents are going to have gone up. Your rates will have gone up as well. Insurance would have gone up, but not as a bigger proportion. So this is something that you could build a huge portfolio off the back of, because every time you look at it, it's going to increase in value and potentially going to cash flow a little bit more as well. Even just $20 more a room in 2 years' time times 27. Do the maths on that. That's a decent uplift, and because they'll value it on cap rate, which is annualized rent, divided by the gross yield in that location, it's gonna keep valuing up. So you do really well on a property like this.
Yeah, for sure. And I think too, there'll be a few people online tonight who might have, like myself, bought the odd unfortunate townhouse in the last 3 or 4 years at the top of the market, and you might just be looking for a cash flow asset that's going to pump in sort of $300 or $400 a week to indemnify you against a $300 or $400 a week loss you might be having from another property in your portfolio. And rather than pull the Band-Aid off and solidify a loss at the absolute bottom of the market, where hopefully we're starting to head back up the other side, you buy a cash flow asset, both of them.
Yeah, double down. Yeah, if you're gonna hit a loss, you're better to double down and get another property that's cash flow positive, balance your portfolio, and then exit when the market's good. And with this property, 3 investors could buy it as well, because there's 3 titles. So if you didn't have the juice to come up with 2.5 mil, you come up with a third of that and just do a JV, and you have protection because you have a title each, and then divvy it up. It won't be exactly the same value. Yep.
Super. All right, so moving on to the next thrilling property deal of the evening. Am I overselling this, Shane? Keep myself in
Always.
Oh, here we go. Hawke's Bay, Vegas. Let's go. So this is a block of flats. It's 6 2-bedroom units across 3 separate buildings. It's all on one title, this one. $1.3 million, 11% gross, renting $2.7 a week, 530 square meters. And this is just another one that goes to show you that smaller town New Zealand, rural town New Zealand is flourishing at the moment at this point of the market. And locations that you might not drive through yourself every day, there's still people living there, and they're pumping, man. Like South Island, I get it. Christchurch, Hawke's Bay, it's the fruit bowl of the country, and so this one's cash flow positive, about $700 a week, and a slightly more subtle purchase price than a couple of the ones we've just seen. It sort of just the $1.3 million mark. 2,000 square meter freehold site, and from all of the photos that I've seen of the insides of these, they're actually in really good nick. The other thing I like about them is the garages divide up the property stock, so you don't have noisy neighbors next to you and stuff. And honestly, if I owned this asset, I'd paint some roofs, throw some paint around, put a nice fence down the front, give them a little bit more privacy, and then just fall asleep for like 10 years. And this is the sort of stock in this town that's just always going to rent. I've also seen the rent schedules, and a lot of the tenants or tenancies within this property have been there for a very, very long time, basically institutional, which points to either one or two things. Either they absolutely love it and they're never going to move out, or the rent's too low. I tend to push on the first one. I think that there's people that just want to live in these places forever. So cash flow numbers on this one, 142 grand a year, 2.7 a week. The mortgage on this would be something around 65 grand. Those mortgage interest rates haven't actually gone up too much when we're quoting these as well, by the way, because the OCR increase will lift the floating rate, but it won't immediately lift the fixed rate, which is more fixed on swap rates and wholesale rates. And those have actually been going down a little bit in the last couple of weeks. We've watched a lot of the main banks with their 18, 24, and 36-month rates actually come down, which I think's
and they want the business too. So you get a slight uplift in the market, which if that happens this year, they will want business. So you know that your actual rate that you could potentially get from a bank may actually drop back, even with an OCR drop, because they just they want to give their customer for 10 years, so they're happy to take a hit on things at the front end.
I mean, if you want to fix for 3 or 4 years with a main bank, you're going to be probably 5.15, 5.25, but at the moment you can get sub 5% rates, as in a high 4, with second tier banks that have really great interest rates like TSB and SBS at the moment, which are doing great stuff. So we've got a property manager on.
I was just going to say, the cash flow numbers are just really as a guide. If you want to put a different rate in there, I mean, it's still going to cash flow, even if you took it up to probably 7.5%, it would still be just cash flow positive. But feel free to chuck in whatever numbers you need. That's just giving you the framework.
And it's worth noting too, and I got pushback on this one today, that we do our cash flow numbers based on paying interest on the entire purchase price, because you're going to put in some sort of a deposit, but you're going to want to return back on that deposit as well.
It's use of money. Yep.
It is. And like, we're not fudging these numbers. Like, I hate these competitors in the market, other people in the market who are doing these property trades, and they're like, oh, it's cash flow positive at year 7 as long as you put in a 40% deposit.
40% deposit, yeah. Cash flow analysis should always be 100% of lending, even if you put a deposit in, because it's use of money. So even if you put 50 grand in, you still need to pay for the use of that. So that's the correct way, I believe, to do it. And a lot of people won't actually put a deposit in. Seasoned investors are on the second, third property. You just recycle. That's the power of property, is that a lot of times it's just the front end of it.
Used up from somewhere else as well, and you've still got to allow for the use of the money on that. So yeah, absolutely.
Yep.
Anyway, so run some numbers on this. 10 grand for management, rates are 21, 10 for insurance. So the property is going to cost you 106. You're going to be getting 142 in. So it's cash flow positive, about $36,000 or $694 per week. So this one grosses at 10% and nets at close to 7.78.
But this is a standard property too. So this is a standard res. This is not a rent by the room or commercial. So an 8% net is very good. Yep. Because you don't have any surprise expenses like you would be with a boarding house or rent by the room.
So this is deal number 3. That's in the comments now. Click it. We'll send you a whole pile more information. We've got healthy homes reports and building appraisals, and we've got all of the invoices and the receipts when the heat pumps went in very recently. Somebody spent a lot of money on this property, and still the yield return is very, very good. So you're getting a whole pile of new stuff for this deal too. So worth giving that one a wee bit of a sniff. In the meantime, we will shuffle along to deal number 4. Now, this is in my hood, actually. Just I'm in Petone and Lower Hutt at the moment. Just over the hill here in Porirua is Cannons Creek. Now, Cannons Creek has always had a fairly lower socioeconomic history, but in reality, it's workingmen's homes. It's places where people live and work from. Now, this is a property deal that we were offered, and it took us quite a few months to negotiate this. It's a property investor who's very active and very young and has moved off overseas and wants to reduce his portfolio a bit. Now, most people look at this with an aerial view and go, well, that's a massive development site. But personally, and in my opinion, it's not, because it's not very steep, but it has a gradient on it. So we've got a registered valuation on this of $3.2 million. We're not selling it for anywhere near that level. There is a very healthy discount to the valuation. There's a 10% gross yield, currently tenanted $5,395 per week. It is 9 properties. So in total, it's got 30 bedrooms. It's a sizable portfolio all of its own.
And they're 3 and 4 bedroom houses too. So they're good quality. So it's not like a heap of 1 or 2 bedroom units on there. Where you get exposure for when rents move around popularity of smaller. A 3 and a 4 bedroom is always going to be in vogue for rental. So yeah. I mean, there's no ones in studios in this area. Everybody wants larger homes. This is a neighborhood, a community. There's families that live there. It's 2s, 3s, and 4s. 2s pretty light. 3s and 4s mainly. It's also zoned medium density, which means you can do nearly 100% site coverage up to 18 meters, which is 3 or 4 floors. So the future development potential is actually banked in there. They've allowed or allocated this location for higher density. That's because at the end of the street, there's a railway station, which will take you straight into central Wellington. But also there's a new motorway going through here. A lot of you might have heard of Transmission Gully, goes from Wellington out north. They're actually doing a cut-through road to join into the back of Transmission Gully. They're starting it at Christmas. And it's starting here where I live in Petone, and it's going straight over Porirua Stream, and it's going to open up Porirua to the Lower Hutt, because it's only about 3 kilometres away. The main reason they're doing it is because every now and then when we get a decent earthquake, Lower Hutt actually gets blocked off. But this will just open up Porirua to Lower Hutt and vice versa very, very quickly. So council rates, about 28 grand. Oh, let's look at the cash flow numbers. It's about $1,200 a week cash flow positive. And that's on current rents that it's actually sitting with right now.
So what it's actually receiving right now is $5,400 per week in rent. The rates are 28 grand. It's cash
The
flow
insurance
positive.
is about 15 or 20 as well, so they're about similar numbers. So
Yep. And the fact that it's up and running means we've got all these details. So once again, there's a link in the comments. This is under deal number 4, the Porirua deal. And if you want to, once again, if you want to buy yourself a village, I mean, I don't think we've got anything tonight that's got more land than this. It's an absolute monster for that. $1,200 a week cash flow positive after all expenses and costs. Certainly sounds better than a brand new 2-bedroom townhouse, let's be fair. Excellent. So that's deal number 4. Moving on to deal number 5. Now, we might have talked about this recently, but Shane and I have a long history with deal number 5. Shane and I first started trading many eons ago. Back when I had hair, you still got, that's unfair, Shane. Sorry, that's a big flex.
thanks.
I actually did have a lot of hair back then. No, so Shane and I found this property 17 years ago and sold it to the person who currently owns it. And he's enjoyed decent cash flow from this property as a rent-by-room property that's 10 bedrooms, 6 bathrooms. It's 280 square meters. He's enjoyed really mint cash flow from this property for the last 17 years. Now, he's brought it back to Shane and I to sell it for him because once he sells this, it freeholds his family home. And he's basically, I don't know, somewhat semi-retired, I suppose, at that point. The thing that I like about this property is that it's absolutely currently up and running as exactly what it is. There's a few little things you could do to tidy it up, but it's a mint deal. And it's also on 750 square meters of land, which is not huge, but it's also not small. And if you stood where this photo was taken and sort of looked around you, immediately on your left, you'll see that there's 3 blocks of units down there. Over the road, there's sections of this size with 3 blocks of flats and units as well. So this site is absolutely a development site for higher density development sometime in the future. But in the meantime, it's going to put $500 a week into your pocket every week because it's full. You can't get any more income.
It's purpose built for what it does. So it's 280 square meters over 2 levels, 10 bedrooms, could be 11. It's got like 6 bathrooms. It's got like a row of 5 showers, a couple of extra toilets and bathrooms, a couple of kitchens, because it used to house a whole lot of grannies in there. So it needed to be fit for purpose. So typically you don't. I think that last property, that the first property, second property that's got 27 bedrooms only has like 7 bathrooms. This has got 10 bedrooms and it's probably got like 6, 7 bathrooms. So it just functions really well. It's not using all the sites so people can get out of the house and be out in the natural light and stuff. So it functions super well as a sort of rent by the room. Yeah.
You were basically was a retirement village, let's be fair. And the thing that I really like about it too is if you go down the main hallway in this property, right down the very back on the right-hand side, there's a big bedroom in there. And the guy that's been in there has been there for 11 years. So this is not a transient sort of style of property. People live in this place for a long time. The lady in the front left bedroom does a whole pile of art and it's on the walls. She does painting herself. And these are not young people. These are people who understand that to rent a 1-bedroom in this location, you're going to be $425, $450 a week. So they are paying a lot less than that in their room. But they are a community. They cook together. They get on together. They enjoy each other's company. And
you get the social aspect. Yeah,
it is. It's a community. Yeah, it's actually kind of lovely, you know.
And I think that's the stigma with. Yeah, and that's the stigma with boarding houses is they think it is transient, that people just leave in the night and paying cash, but typically they stay reasonably long term. So and they're on.
My longest one guy is Eddie. He's been there 10 years in one of my boarding houses. And, you know, you end up creating and developing a community. And I just don't see all this negativity that other people see. Like, it's not a halfway house for people coming out of prison or something. It's just wrong.
No.
It's just average everyday people living their lives, man. And I feel quite protective of the communities that I put together like that as well.
Yeah. Or they think it's a whole lot of students that are just going to drink booze all the time and do yardies and do dares and run naked down the street. And that is an option. Like that Dunedin one, you could fill it full of those, but typically they are middle age to older people, typically working, unemployed, a blend of people. Yeah.
Mature, serious. Yeah. So I mean, here's the cash flow on this one: 2,200 a week coming in, 47. Call it 50 grand for the mortgage if you like, 10 grand for management, 5 for rates, power and internet about 11. But then that's based on actual expenses over a 12-month period as well. 5 grand for cleaning. So get someone to mow the lawns, get someone to go in and every fortnight just clean the kitchen, bathrooms.
I think that figure's way too high. I think if the new owner, I would halve that or take it down to about 2 grand. It's obscenely high. So, but
So it's cash flow positive. We're calling it 580 odd bucks a week, but we've also got a vendor on this particular property who's willing to offer some leeway on price, condition, and settlement. And what I'm saying by that is, if somebody online tonight was interested in this particular property deal but didn't want to stick with exactly our numbers, let's have a conversation.
Yeah, we have reduced it. We reduced it originally. It was $1,080,000, so it's already 140K price reduction, and he will come down a little bit further just because the Wellington market's a bit sticky to sell in, and he would like to sell it. So happy to either look at a price. Sorry,
I was in this property last week, and there's people living in every room, and so it is actually getting that 2.2 a week at the moment. It's fully tenanted.
And the market appraisal was closer to the 3. So if you could get the rents up to market rent, so we've actually lowballed those numbers based on a blend of what the numbers are, because they are lower. If over time you could get people up to closer to the median or the top end of the rent by the room, it would actually deliver closer to $3,000 a week. But we don't want to just offer a rental appraisal that it's not currently getting and make the numbers look better, and then you're only going to get that. So that's your worst case scenario, is the current. You've actually got some scope to increase cash flow, probably another sort of $200 to $400 a week, easy. Potentially get up to $1,000 a week cash flow positive. Yep. And the garage could be more rooms. That's like a fully waterproof thing. You got a back section. We don't have the photos on this bit, but the back section, you could put another dwelling on that as well. So there's
I think if you really wanted to do something with a garage, you'd demolish the garage and put a cabin on the concrete pad.
Yeah, exactly. Yeah. So like I say, because you got so many bathrooms and all that, you could add more rooms. You could get it to 12 or 14 bedrooms at $250 a room. So if you had the appetite for that.
Number 5. So link in the comments there. As I said, click on it and we'll send you all the further information that we've got, bits and pieces. But if that one's of interest to you, do give Shane a quick tinkle and say, hey, look, the Wataki Street deal number 5, and let's give it a tickle and see if we can't put that one to bed, because it's been running brilliantly for 17 years. All somebody has to do is pick it up and run with it, and off you go. So this is deal number 6. This one's a bit interesting. Now, this one's going to take somebody with a little bit of foresight and bits and pieces, and this is a brand new deal. We've only just got our hands on this one. I think it's a bit of a boomer. It's an interesting one to explain. So we're quoting a 15% gross yield, but it could be a lot more than that. This is, once again, it's an old people's home, but it hasn't been used as an old people's home for about 10 years. There's some roof issues. There's some internal issues. This one needs some love, and we're just working our way through it. And we would love to work our way through robust due diligence with one of the guys on this, or guys or girls on the webinar tonight, who's interested in a real project that's like the last deal. If you pick that up, you're going to bank $600 the following week. With this deal, you're not going to have any income for a few months. You're going to have to put some money into it, but then you're going to get a massive cash flow, but you're also going to get a massive uplift from the value that you purchase it for to where it will be worth, because the revaluation on this will be brilliant. If back in the day, I loved these deals because this is the epitome of what I would describe as a unicorn deal. Because a unicorn deal for me is you can buy it, you can add value to it, you can rent it for higher than what it was getting before, and then based on what Shane mentioned earlier with a capitalization rate valuation, you can see exactly what level it's going to value at, and it's going to revalue it much, much higher. You're going to have fantastic income and a much higher valuation. What that means is that you can go back to your bank and revalue it, refinance it, and recycle, meaning pull your deposit and your renovation capital out of it, and it should still be cash flow positive once you've pulled all of that money back out again. Stop mucking with my slide. I'll tell you off.
Yeah, sorry, shouldn't give me control. Yep, apologies.
So we've got 2 or 3 rental appraisals on this property, and they all come in. We've used pretty much the average. It should get about $3,500 to $4,000 per week. This thing is massive. We got
with 15. That's with 15 rooms, and there's actually 19. So once again, we've given a realistic number rather than trying to tell people you're going to have 19 full all the time. That 15% year was off 15 rooms. You've still got 4 rooms to rent that you could have vacant all year round and still maximize that. So there's, like Steve said, it could be even a 16.5% yield if you did the full 19 rooms.
Now I'm gonna throw you a bit of a treat here. It's the GV or the CV on this property is $2.1 million. The buy price is not. The buy price is well below $2 million. Okay, but the renovation cost is not going to be $100,000. It's not going to be paint and carpet, right?
Yeah.
So you're going to
$250K
at least, yeah.
At least, yeah.
And so if somebody was really interested in being very, very active in the market and putting something together, in my opinion, you could end up with something here that has a 15% net return, for instance, if you did everything right. You could also, early next year, once you've finished the renovation, got it fully tenanted, got it revalued and refinanced, you could pull all of your money back out and just have the bank's money in this property and still be banking $1,000 or $2,000 a week in cash flow positive. This is actually a real true unicorn deal. If I was interested in selling a couple of my lovely properties and cashing up a few $100,000 and jumping into something and really getting committed into another big project, I would do exactly this. This looks a lot like my Whanganui Street deal in Petone here that I did recently, that I put in some money, I got all that money back out, plus extra money out, and it's still been cash flow positive every day since then. So, yeah, this is a pretty stunning deal, and that's why we left it till last. Now, this is deal number 6. We have the link in the comments there. You can click that. We'll send you everything we've got currently, and we would love to help you and work you through due diligence on that property. What do you think, Shane? I think this is one of the better deals we've seen in quite some time.
Yeah, like I say, it's not for everyone. You got to have the gumption to do it. But there's the best part of $1 million worth of equity there somewhere. When you do it, pull the cash back out. The building's got some issues, but it's also got a lot going for it as well. And I think if you were efficient with the renovation and you planned it out properly, then you could get good bang for buck. If you went in and did bits and pieces at a certain time, then it would be exorbitant. So, you're basically converting best part of 750 square meters of building on 1,600 squares. So, yep, I think this is a legendary deal. Yep. For sure. Yep. And like I say, we've only just picked it up. We haven't really done a heap of due diligence on it. So we're very careful to quote things, but we're happy, as Steve said, to work through with people with the due diligence as we do it, and work out whether we can solidify all these numbers and see if it actually makes sense for everyone. I mean, either way, it's going to be a great deal, but just whether it's going to be a really, really great deal.
Yeah. I mean, I've set up 32 or 33 rent by room properties in the last 20, 25 years. And I would love to get involved in this and help out with my expertise in assisting somebody from taking it from this raw product and turning it into what I believe that this could be, which is the key centerpiece on somebody's massively cash flow positive property portfolio. And I'd love to help out and get involved in that and be part of that with somebody. And, you know, much as we have done, Shane and I, with a lot of these previous deals that we've done in the last few months, which we just at the end of this webinar wanted to roll through and flex a little bit. But we're still in touch with all of these people that have bought these property deals off us. We've helped them out with a strategy and what they're going to do with it within their portfolio. We're helping them tenant them and rent them and renovate them, revalue them and recycle them. And we've gone through a lot of really high net worth properties and high yielding properties. And the reason that we love these properties is because, you know, I got pretty feral on the internet with real estate agents in the last 12 months who are claiming things were cash flow positive. But that's not the real evil. The real evil, in my opinion, is people marketing new builds and off the plan developments and stating absolutely false claims about pieces of real estate or fudging things like rent guarantees. Well, I'm sorry, but if it's going to rent,
you're going to guarantee the rent. If you're going to guarantee the rent, that's a red flag. Yeah. Free Tesla.
We're going to get lightning strikes and smited by the industry, but
we're not naming anyone. We're just saying there's some people that do that.
Well, yeah, but I mean, if you want to buy new builds, then go buy new builds. If you want to buy equity or cash flow, then here it is, guys. Like we've been doing these for a long, long time, and I've been developing and renovating older houses and you know, non-new property stock for a long, long time. And at a certain point in your marketplace, you need equity in your portfolio. Every time in the marketplace, you need cash flow. So here it is, and this is what it looks like. And you know, like I said, we'd love to work with you and assist you and help you. And if you've been on any of the number of the last 5 or 6 webinars that Shane and I have done over the last few months, hopefully you'll see and understand that, you know, we're property investors, we're realistic, we're not fudging any numbers, we're calling a turd and calling a unicorn a unicorn. And we want to help you guys with growing your portfolios so that you'll come back and buy more properties off us. And in doing that, obviously, we have some partners. This is Dave and Jack Windler of the Mortgage Supply Company based out of Auckland. We work very, very closely with the Mortgage Supply Company because I tend to work with people for decades. Mortgage Supply, Shane, and I've got
bankers are the best in the business.
Well, yeah, they are. They're huge aggregators. They do a lot of business, but they specialize in this type of property stock. They specialize in recycling for investors and getting things through banks and making things work and making them happen and just not fudging numbers. They're just so damn ethical and straight with it, which I find is incredibly refreshing in this industry. So if you want to come to next month's webinar, finance approved or with an idea of at least how much capacity of lending you can get, there's a link in the comments in there under the Mortgage Supply Company, and they'll be able to take a look at you as a financial entity and say to you, we can probably get you 800 grand, or we can probably do this. And if they can't, they're going to go, you need to go away and do some homework, and this is what it looks like, which is, you know, honest and completely helpful. The other people that we work with is Gilligan Rowe and Associates. Matthew Gilligan's a very good friend of mine. Once again, I've worked with him for something like 20 years, and they are tax structures and entities experts. So more than just being very, very good financial accountants, they can help you with structures of wills and taxes and all of that type of thing. And for people that join my webinar, Matthew has allowed us to do a certain amount of free consults with them. So if you're not a client of Gilligan Rose and you've never had a free consult with them, you can click the link in the comments there under GRA referral. And because you've joined my webinar, which to Matt Gilligan's eyes means you're a serious player in the property market, you're looking at making some decent moves, they will do a free 20-minute consult with you on a Zoom call sometime in the next few days or weeks and give you an idea of what you need to be able to not only grow your assets, but protect your assets and your portfolio. So there we go. That's our presentation for this evening. We've been in just about exactly 50 minutes. We've done pretty well for 6 flash deals. Now, before you do run away though, please make sure that you're jumping on Shane and my deal alerts through Shane's company, Cashflow Property, .co.nz, and we'll put those links in as well. If you are indeed very impressed with the types of property deals that we are finding and have found tonight, you can jump on this bespoke buyer's service. This is for people who want to work directly one-to-one with Shane, and you will be interviewed by him, and it's a bit more of a serious version of that. If you just want to see all the deals come through on your emails and then contact us when one is of interest, jump on his alerts database. If you want to work with Shane more directly one-to-one, which I would highly recommend, he's very, very good at what he does, jump on his bespoke buyer's service. Now, just as a free sniff before everybody goes, I've got one more deal that I've been working on that I wasn't able to present tonight. We'll do it very shortly, and it will come through Shane's deals alerts in the next few days, I would imagine. To give you a bit of an idea, this one's hilarious. It's a property that I owned and sold and bought back and sold and bought again. This property's so good, I've owned it 3 times now. And I don't want to give too much away because it's hilarious, but it was the linchpin of the cash flow of my portfolio for many years. And the massive cash flow coming off it allowed me to buy a lot of other properties that I still keep in my portfolio today. We should have that up and running sometime in the next few days. So there we go. So jump on.
Yes. So good reason to jump on the deal alerts. It's pretty simple, just your name and email and phone number. Yep. And then you can get a feel for what deals are coming through and you won't miss any. Yeah.
And you can unsubscribe at any time. Obviously, that's always,
no, never. You're on there for life.
Stop it. You get us in trouble. All right, awesome. Well, I've done a lot of talking, so thank you so much, everybody. We had a good turnout tonight. Hopefully those deals are of great interest. Click any of the links that you want to. Jump on and have a chat to Shane about them. And look forward to seeing you in the next deals webinar that we do. Thanks, Shane, for all your work in the background, getting those sorted out tonight.
Thanks. See you guys.
And thanks, Rome, too, for all the links. Love your work. Thanks so much. All right.